I wish you continued good health and happiness in the festive season ahead. The quarter's performance reflects a transitional phase for the bank as we continue to realign our portfolio and operating model in response to the changing interest rate environment. The recent 75 basis point repo cut in Q1, which we proactively passed on to our customers during Q2, had a short-term impact on the margins. However, this is part of the adjustment process that will position us well for sustainable growth ahead. As the repricing of deposits takes place over the next few quarters, we expect to see the full benefit of lower funding costs, which will help improve margins and support profitability going forward. Before delving into the quarter's performance, let me begin with a few initiatives we undertook during the quarter to improvise our products and services with innovative solutions and to better serve our customers. We continue to focus on strengthening our granular liability franchise through innovative and targeted offerings. We successfully launched the Grow CASA Grow Together campaign, an exclusive CASA drive aimed at promoting current and savings account growth across segments. This initiative is gaining traction and is already yielding encouraging results. This reinforces our commitment to building strong, long-term relationships with our customers. We further placed emphasis on sourcing new corporate salary accounts by leveraging our revamped salary product offerings. This initiative allows us to provide a more seamless and rewarding banking experience to employees of partner companies while expanding our CASA base in a sustainable manner. The bank introduced specialized products for HNI individuals, including the Elite, Elite Plus, and Legacy savings accounts, designed to meet the unique needs of our HNI customers. These offerings not only enhance our value proposition, but also deepen relationships with this key customer segment. Through these focused initiatives, we are confident of driving CASA growth, enhancing customer engagement, and delivering long-term value for all stakeholders. I now move to the performance of Bandhan Bank for Q2 financial year 26 and the first half of financial year 26. I would like to candidly acknowledge that our Q2 financial year 26 performance were somewhat below than our internal expectations and the estimates. However, the underlying trends and structural improvements gives us confidence for an improving second half. There are a few factors that contributed to the softer Q2 financial year 26 performance outcome. Firstly, the 75 basis point repo cut, which impacted a major part of our advances, and the 200 basis points reduction in MCLR that has affected almost 50% of our books. With this moderated interest income growth in the quarter, we have partly offset this impact through reducing cost of savings accounts. However, larger benefits from lower cost of fixed deposits will come through mainly from Q4 onwards. Growth in our EEB portfolio remains subdued as the full impact of the industry level guardrails is taking longer time to materialize than anticipated. And while these factors moderated near-term performances, we remain confident in the bank's underlying strength. The initiatives we have undertaken, including enhanced collections, strengthened risk management, and disciplined growth strategies, are already in motion. We expected these measures to translate into improved growth and profitability in the upcoming quarters. On a positive note, there are several encouraging developments this quarter. Firstly, growth in our non-EEB book remains strong, reflecting the resilience and diversification of our loan portfolio. At the same time, the share of secured assets continues to rise, which strengthens the overall quality of our advances. We are also seeing renewed momentum in CASA, which is a testament to our focused efforts in building a strong and stable deposit base. In parallel, our reliance on bulk deposits continues to decline, supporting a more granular and sustainable funding profile. From an operational perspective, our OPEX to asset ratio improved quarter to quarter, highlighting disciplined cost management. Importantly, in the EV segment, SMA1 and SMA2 balances have declined sequentially, signaling early signs of improvement in asset quality that we expect to see reflected in the coming quarters. Finally, the bank's capital and liquidity position remains robust providing a strong foundation to support future growth and strategic initiatives. Taken together, these developments give us confidence in the resilience, efficiency, and long-term growth potential of Bandhan Bank. Now, I would like to highlight a few key developments and performance indicators from the second quarter of financial year 26. As of September 30, 2025, our gross advances stood at 1.4 lakh crore rupees, reflecting a YOY growth of 7%. On the liability side, total deposits reached 1.58 lakh crore rupees, growing by a healthy 11% YOY and importantly outpacing the growth in advances. This clearly reflects our strategic emphasis on maintaining a healthy balance sheet that supports sustainable growth. Our retail term deposits continue to show strong momentum, growing by 38% YOY. Our CASA deposits now account for 28% of the total deposit base, and the overall share of retail deposits, including CASA and retail deposits, improved to 71% compared to 68% in the previous quarter. This demonstrates a strong improvement in the granularity and stability of our deposit base, aligning well with our focus on building a sustainable and customer-driven franchise. We continue to execute our diversification strategy with steady progress. During the quarter, our secured book recorded a growth of 25%, resulting in an improvement in secured portfolio mix to 55% compared to 47% a year ago. Our NIM for Q2 financial year 26 stood at 5.8%, reflecting some pressure mainly due to the impact of the repo rate moderation. That said, margins continue to remain at healthy level for half year financial year 26 with the NIM at 6.1%. Credit costs saw a small improvement sequentially. Gross and net NPA ratios remain stable quarter on quarter at 5% and 1.4% respectively, while our PCR, including technical write-off, improved slightly to 87.6%. For quarter 2 financial year 26, our net income stood at 3,135 crore, while operating profit was 1,310 crore. The bank reported a PAT of 112 crore for the quarter. Our capital position remains strong, including quarter 2 financial year 26. The capital adequacy ratio stands at 18.6%. As the microfinance environment moves towards stability, we remain confident in our ability to leverage the emerging opportunities ahead. Our focus will firmly remain on prudent risk management, disciplined execution, and identifying new avenues of growth, while continuously enhancing operational efficiency to drive sustained performance. Before I conclude, I would like to reiterate that over the last year, we have articulated the Bandhan 2 strategy and have taken measures to achieve the same. We have taken steps to transition from a microfinance-focused bank to a full-service commercial bank. The focus of our transformation initiatives has centered around a seamless integrated customer journey and a broad-based presence in various banking segments driven by technology and cost efficiencies. Risk, compliance, and governance are the pillars on which we are moving ahead. These measures are being taken to achieve long-term value creation for our shareholders. I am confident that in the long run, we will achieve balanced, profitable growth with a focus on enhancing shareholder value. Thank you.
Thank you, sir. We will now move on to question and answer session. I request anybody who has a question can raise their hand. We will have the mic.
Let me tell you very candidly that we have said that we will grow in this microfinance segment, but our growth in the secured segment or non-microfinance segment will be much more. So that is our strategy, the plan. However, because of the, as you all know, that the scenario, the industrial scenario in the microfinance in this particular segment, we have degrown this quarter by around 13%. So it is by 13% we have degrown for that year. And while in the non-microfinance or the non-EEB portfolio, we have grown by 25%. So strategically, definitely we are on the line, and we will during this transition phase there will be an impact on the profitability. That was your next question for that year, because microfinance definitely the yield was much more, but there are some issues also which still need to be addressed and still need to be stabilized. So we are finding this segment moving towards the stability with a reduction in NPS. We are hopeful that maybe in the coming 2 quarters, we can make a good amount of income from this segment.
Business, right, which is the group loan plus SBAL, which we call as microfinance, that grew by 12.7% on a year-on-year basis, right? So that is what the yearly trend is. The non-EEB, which is other than EEB business, grew by almost 24%. So that continues to grow well, which is largely secured business, and that has been going very, very well. The EEB is still having an industry sort of risk factors, and therefore the decline is coming through. But the share is what we had said that we will decline. We still want to grow it moderately. So we'll be looking in the next few quarters in terms of bringing the growth back in a moderate way on the EEB.
So for the first one, we are going to introduce credit card. We are hopeful that probably during this financial year, we'll be probably introducing the credit card. So that is in our plan. And for the senior citizens, I can say that we provide 1% extra interest in the fixed deposit segments, and for the senior citizen savings, of course you have said that product wise probably we don't have. It is a suggestion what you have given, we will explore it. But let me tell you that the services that are provided to the senior citizens, especially in terms of interest rate, we continue to provide almost 100 basis point higher in the fixed deposits from which they earn, and compared to many other banks who provide around 50 to 75 basis point. অ্যাকাউন্ট আছে আপনি যেটা বলছেন একটা কমন অ্যাকাউন্ট করে দিয়ে আমাদের জিরো ব্যালেন্স অ্যাকাউন্ট থেকে শুরু হয়। इनफैक्ट माइक्रो सेगमेंटे वी हैव कॉल्ड दैट अकाउंट की प्रोडक्ट का क्या नाम है? वी हैव गॉट संचय ना, एसबी संचय। আমাদের সেভিংস ব্যাংক সঞ্চয়, সেখানে কোনো মিনিমাম ব্যালেন্সেরও দরকার পড়ে না। তো এটা সবার জন্য নয়, আমাদের বিভিন্ন কাস্টমারের জন্য বিভিন্ন প্রোডাক্ট আছে।
কিন্তু আমি নিজে গেছিলাম তো বন্ধন ব্যাংক আমাদের বাবানগর বাজারের ব্রাঞ্চে, তো ওখান থেকে এরকম কোনো গাইডলাইন্স আমাদের দেওয়া হলো না। বললো অ্যাকাউন্ট করতে গেলে 10,000 নিয়ে আসুন এবং আপনার পরিচয়পত্র নিয়ে আসুন। এই বিষয়টা কিন্তু একটু দেখবেন আর কি, যাতে
ঠিক আছে,
We'll sort that out. We'll help you.
we'll take a note.
We will take a note, sir.
So let me tell you that this quarter we have grown our advances by almost 7,000 crores despite the repo cut. That is the first part of it. And in the as for the deposits also, there is a good amount of deposits growth. As I told that this year continuously from March we are growing it, and from March I think almost close to 7,000 crores of deposits has grown, and during the quarter also we have grown by 4,000 crores. But let me tell you, actually it is 9,000 crores because we have reduced bulk deposits by almost 4,000 crores. So it is almost 8,000 crores in the retail deposits we have grown. So nothing much, because people also understand that whenever the repo cut takes place, all banks do cut their interest rates because the advances rate come down. I think it was a
Quarter on quarter was 4.8% growth, quarter on quarter, which means the last quarter we had 1,33,400 crores.
Last quarter, what was the YOY growth?
The last quarter YOY growth was I think 6.1%. 6%, 6.1 or 6%.
So 6 it has increased to
So
7.
6 has gone up to 7.1.
Very candidly, who has asked this question? Just can you raise your hand? Okay, for the day. So we are probably the only bank who have voluntarily given the names of those persons to the police authority. In fact, the police has also acknowledged in their press statement for the day. There is zero tolerance in this area. These fraudsters are not only sitting in Bandhan Bank, such miscreants are sitting in many of the banks and many financial institutions. That's why the financial frauds are taking place. But we have a complete zero tolerance in this matter. So given what may, if we find out some people, some of our staff who is not acting as per the policy of the bank, who is helping the fraudsters, we so moto take that staff and give the name to the police authority. And because of our support, because we have given all the data to the police has been able to find out the ultimate culprits. Because they are not the ultimate culprits, they are just the informers for that day. But through them, the police could reach the ultimate culprits, and many of them have been arrested. So it will always be our effort, in fact, our commitment to our customers that we will keep your money safe. Commodity, and we will not spare our own staff also if they act miscreantly in any of their deeds.